Customer can purchase the security of the company so that they can raise their capital. So they can invest, or the investment or the capital can raise through this function. Credit for the rural industry, this cooperative bank established. So the main objective is to easy access for the rural applicants or rural industries. The main objective of this LDB is to promote the or to encourage the development of land as well as the agricultural sectors. Hello everyone, a warm welcome to one and all to the second session on Law and Practice of Banking. I am Meghana from the Department of Commerce, lecturing in Vidhyaashram First Grade College, the Temple of Excellence. So in the last session, we have discussed about the meaning, definition of bank and the classification of bank. So in today's session, let us discuss with the commercial bank. So we all know the brief introduction about commercial bank. What do you mean by commercial bank and the types of commercial bank? So let us discuss in detail about the commercial bank, then industrial or investment bank, cooperative banks, land and development banks, exchange bank and central bank and its function. So let us start with the commercial bank. So we know what do you mean by commercial bank. Commercial bank is a financial institution which accepts the deposits and which lends the money to the general public or the corporation to make profit. So the main objective of the commercial bank is to earn profit. So through this, along with the accepting deposits and lending money, they undertake various other banking activity in order to make profit. So here, commercial bank is a kind of financial institution that carries all the operations related to deposits and withdrawal of money for the general public, providing loan for the investment purpose and other such activity. So these banks are profit-making institution. The main objective of this commercial bank is to make profit. So and do business only to make profit. So only to make profit. Profit is the only motive of this commercial banks. So the two primary characteristics of commercial banks are lending and borrowing. Lending and borrowing. So the rate at which the bank offers, or the rate at which bank offers for the borrowing or for the deposit, we call it as a borrowing rate. So the rate offered by the bank for the deposits, we call it as a borrowing rate, and the rate which they charge for the lending of money, that is lending rate, or we call it as a borrowing rate as well as the lending rate. So we have two rates, borrowing rate and lending rate. One is for the rate at which the bank offers interest for the deposits. So for the customer will get the interest for their deposits, that is borrowing rate. So the rate at which they are going to pay interest for their loans, so that is lending rate. So we have two characteristics or two rates in banking under the commercial bank. So moving further, what all are the functions of commercial banks? So the functions of commercial banks are classified into two types. First is primary function and second one is secondary function. Primary function and secondary function. So under primary function, we all know accept deposits. So they accept the deposits from the general public in order to lend the money. So they accept the deposits and they pay interest, that is borrowing rate, at the borrowing rate. So next one, provide loans and advances. So that is lending money for the customer, lending money for their customer to invest. So lending money, that is providing loan for the investment. So next one, credit cash. Credit cash means, so directly they are not going to give hard cash for the customer, for their customers. So while taking the loans or advances, they are not going to give the hard cash for the customers. So they are going to credit the cash for their account. Through that account, you can withdraw the cash. So that is credit cash. So bank is going to deposit money or they are going to transfer or credit the money loan amount to your account. So through that you can withdraw the money. So that is credit cash. So next one is secondary function. So secondary function, first one is a discounting bill of exchange. Discounting bills of exchange. It's a written agreement acknowledging the amount of money to be paid, for the purpose of purchasing of goods or services at a particular time in future. So we have purchased the goods or services. So for that we need to pay money. So this agreement, this bill of exchange, it consists of the date, time and the money. So it's a written agreement which acknowledging the money paid to the supplier. So we are going to pay in future. So it's an acknowledgement for that purchase and sale, for the transaction. So it consists of the amount as well as the maturity date. So if the receiver or the seller wants to receive the money before the maturity period, they come to bank and bank is going to receive the bill of exchange and they are going to pay money, but on the discount rate. That means bank is not going to pay you the whole money or the full money. They are going to discount it and they are going to give the money. Before the maturity period, the customer can receive the money, customer can get the money at a discount rate. For example, 1 lakh rupee is an agreement value. Agreement value means, so if you want to receive the money, before the maturity period, so maturity date is 20th December 2022. 20th December 2022. But this customer requires money immediately. So is going to discount his bill of exchange with the bank. So you want to receive the money before 1 month, like 20th November 2022, you want money. So you are going to deposit, you are going to give the bill of exchange to the bank and bank is going to discount. So for example, 10%, they are going to discount at 10%. The remaining 90,000 you are going to receive on this date. So after maturity, so on 20th December 2022, bank is going to collect 1 lakh rupee from the seller, from the buyer. So this 10,000 rupees is a profit for this bank. So you are going to receive the money at a discount rate. So that is discounting bills of exchange. So it comes under the secondary functions of commercial bank. So next one, overdraft facility. So you all know, as a commerce student, you all know overdraft. What do you mean by overdraft? Overdraft is a facility given to the current account holder. So you can withdraw the money, you can withdraw more money or excess money from your account. Bank is going to charge for those services. So this facility is given for the current account holder. So this also comes under the secondary function. So next one, purchasing and selling of the security. So here bank as a middleman, act as a middleman between the investors as well as the company. So through this function, so bank can help the companies to become a public company. Like the customer can invest in the, customer can purchase the security of the company so that they can raise their capital. So they can invest, or the investment or the capital can raise through this function. So they act as a middleman here. So or else they are going to purchase directly from the companies and they are going to resell on a commission basis. So on each share they are going to charge commission. So either they may purchase directly from the company, or else they may act as a middleman between the investors as well as the companies. So next one, locker facility. Locker facility you all know. So in order to secure your property or your gold or your cash, anything, we provide a locker facility. They are going to charge for that facility. So your property is secure, or the separate locker is provided for the customer, so you can safeguard your valuable items. So next one, paying and gathering the credit. So paying and gathering of credit, that means we are going to collect all the instruments, different types of instruments like promissory note, check and this bill of exchange. So we are going to pay for the customer and we are going to collect all the instruments, all the different types of instruments. So on the maturity date, we are going to collect the money from the payee so that bank can earn profit. So these all are the functions of commercial bank. So functions of commercial banks are mainly classified into two types, primary and secondary functions. So accepting deposits, lending money, and Credit cash is the primary function. Then bill of exchange, overdraft facility, purchasing and selling of security, then locker facility and paying and gathering of credits. Paying and gathering of credits all comes under the secondary function. So this is all about the commercial banks. So moving further, next topic is investment or industrial bank. So what do you mean by investment bank? Investment banking is a special segment of banking operation that helps individual or organization raise capital and provide financial consultancy services to them. So they act as an intermediary between the security issuer and investors. So and helps new firm to go public. So here also the bank acts as a middleman with the investor as well as the company. It helps the company to go public. So they are going to issue the shares for the general public. Through the investment bank, we are going to invest on the companies. So it helps the companies to go for public sectors. So they either buy all the available share at the price of estimated by their experts. So as I told you earlier, investment banks is going to receive, or investment bank is going to purchase all the available share of the company. The price is estimated by their experts. So the price is estimated by their experts. So based on that price, they are going to purchase all the shares, available shares. Only the investment bank is going to purchase all the available shares. So then they are going to resell them to the public, or sell shares on behalf of the company, on behalf of issuer, and take the commission on each share. So they will charge commission. They are going to receive the commission based on for each share. So they are going to resell on behalf of the issuer, or they may charge commission for each share. These are all the activities under investment bank. Mainly this is for the companies. So they are going to purchase all the available share from the company, or else on behalf of the issuer they are going to sell the shares and they receive the commission. So only for the shares purpose. So for the investment purpose. So here this is all about investment banks. So moving further, next topic is cooperative banks. So cooperative banks are the government bank financial institution that work on the principle of cooperation. So these banks works on the basis of on principles of cooperation, self-help and mutual help. So the cooperative banks are mainly set up to provide access to credit in the rural area. So in order to provide credit in the rural area, this empowers and secures the poor and low income group. So in order to promote the poor people as well as the low income group, this cooperative bank established. So in order to promote them, in order to encourage them, in order to access to credit in the rural area. So why you want to promote the rural area or the low income groups? So what are the benefits or what are the objectives? So the cooperative bank offer basic banking financing and services. So basic banking financing and services means accepting deposits and lending money to the general public. So here you will consider poor people as well as the low income people as well as the urban area, rural area. So that we call it as a customer under the cooperative banks. So they offer the basic function and services in the rural, urban as well as the semi-urban area So where banking facilities are scarce. So where the banking facilities are scarce, so in that location we are going to establish a cooperative banks in order to promote or in order to give the financial services for them. So in order to promote them, in order to help for their activity, for their business, we are going to establish this cooperative banks. So unlike the commercial banks whose sole purpose is to make profit, whose sole purpose is profit making, cooperative banks help and encourage rural business and the agricultural sector. So the main objective is not making profit. So their main objective is to promote, encourage the rural people. So in order to encourage their business, rural business, small scale industry as well as the agricultural activity. So in order to encourage and promote the agricultural sector, these cooperative banks are established. So now we know In the previous session, we have discussed about the types of cooperative banks. So under that, we have a urban cooperative bank and state cooperative bank. So in order to promote the rural as well as the urban area, in order to promote small scale industry, small business as well as the agricultural activity, these cooperative banks are established. So the objectives of cooperative banks. First one, provide credit facility like rural financing and microfinancing, small financing, microfinancing, short-term finance as well as the small investment or small money for the rural people. So in order to promote their activity. So next one, cooperative bank aim to offer credit to the common man at a moderate interest rate, eliminating the dominance of private money lender. So their objective is to eliminate the private money lender as well as they are going to reduce the interest rate. They are going to provide the banking facility, finance facility at a moderate interest rate compared to commercial bank. The interest rate in the commercial bank are very less. So next one, providing agricultural loans to the farmer at a low interest rate for the growth of agricultural sector in the growth of the agricultural sector and the activities. So that means for the agricultural purpose, in order to promote the agricultural activity, agricultural sector in India, we are going to provide finance at a low interest rate. Sometimes 0% interest. At a 0%, we are going to provide the loan for the farmers in order to promote the agricultural activity, agricultural sector for the economic growth. So next one, providing easy access to credit for the rural industries. So taking loan from the commercial bank is difficult factors. So we need to submit all the documents, required documents and etc. So in order to facilitate, in order to access credit in a easier way, credit for the rural industry, this cooperative bank established. So the main objective is to easy access for the rural applicants or rural industries. The next one, providing financial services in the rural area where the banking facilities are scarce. So providing financial services in the rural area, the number of banks are established in rural area is very less. So where the facility are less, so in that location we are going to establish a cooperative bank and provide a financial facility or financial services. So next one, helping the poor and low income groups access banking facility and get loans at a lower interest rate for the cottage industry, agricultural, farming, small business and so on. So for all this industry and for all this activity, we are going to promote and we are going to provide banking facility or financial facility at a low interest rate. So these all are the objectives of cooperative banks. So moving further, next one, land development banks, LDB. Land Development Bank is a special kind of bank in India and it is of a commercial type. It is also a type of commercial bank which provides services such as accepting deposits, basic function of bank. So accepting deposits and lending money, accepting deposits and making business loan and offering basic investment products. So the main objective of this land development bank is to promote the development of land and agriculture. So the main objective of this LDB is to promote to encourage the development of land as well as the agricultural sectors. So to increase the agricultural production, this LDB provides the long-term finance to members directly through its branches. So directly they are going to provide loan for its member, long-term finance for its member in order to promote development of land and agricultural activity. So for the agricultural purpose, in order to purchase the agricultural land for the agricultural activity, we are going to provide direct loan for its member through its branches. So these all are the functions and activities of land development banks, objectives and functions of land development bank. So moving further, exchange bank. What do you mean by exchange bank? Exchange bank means a bank or other institution that credits FIAT currency to the payee account designed by you through the services. So they are going to provide services, FIAT, currency to the payee account designed by you through the services. So they provide FIAT currency services. So what all are the functions of exchange bank? So first one, financing export and financing import. So they are going to deal with the foreign currency import and export. Next, financing internal trade along with the foreign currency internal trade. For the internal trade also, they are going to provide financial services. So next one, general banking function. General banking function means basic function, accepting deposits and lending money. So next one, encourage foreign investment. Foreign investment, they promote the foreign investments. So next one, access to international capital market. So it helps to access to international capital market. These all are the functions of exchange bank. So mainly they deal with the foreign currency, financial import and export as well as the internal trade, and they helps to access to the international capital market. So moving further, saving bank. You all know about the saving bank. So it's a bank in order to save the money for your future. So here, saving account is an interest-bearing deposit account held at a bank or other financial institution. So it's a interest-bearing for the interest purpose. So in order to get the interest, all the general public will open saving bank account. Almost all the customer we have a saving bank account in any commercial banks. So bank or other financial institution. Through this accounts typically pay a moderate interest rate. Their safety and reliability make them a great option for parking cash you want to available for the short term needs. So in order to meet your needs in future, in order to meet the financial needs in future, this saving bank account is going to help you. That means whenever you have a excess money, you are going to save or we are going to deposit in the bank, so that we will get the interest and we can deposit, we can withdraw the money whenever it is needed. This is all about saving bank. I think I don't want to explain the saving bank account more because you all know about the saving bank. So moving further, central bank. Central bank, Reserve Bank of India. So Reserve Bank of India is run under the Regulation Act 1949, RBI Regulation Act 1949. The central bank controls the supply of money as well as how it reaches the customers. So you all know central bank or the Reserve Bank of India, they control over the supply of your money in the economy. So as well as how it reaches the consumers. So they regulate how it reaches the consumers. So it cannot only print and inject money into the economy but also regulate how commercial banks distribute it. So the main objective or the main function of the commercial bank is to print the notes. So their function is not only printing the notes, as well as they are going to regulate how the commercial bank is going to distribute the money in the economy. So next one, the central bank has been described as the lender of last resort. Lender of last resort, which means it is responsible for providing its nation's economy with the fund when the commercial bank cannot cover the supply shortage. If the commercial bank fails to manage the money supply or money shortage, then this central bank is going to manage with this shortage. So then, in other words, the central bank prevents the country's banking system from falling. So is going to manage, the central bank is going to manage with the financial activity. So money circulation in the economy as well as balancing the money shortage. So they are going to regulate, they are going to guide the commercial banks in order to operate in the Indian economy. So moving further, what all are the functions of commercial bank? So first one, currency regulator or bank of issue. So they print and circulate the money money in the country. So they are not only printing the money, so they are going to control over the Indian financial system. So all the printed money they are not going to circulate in the economy, but fixed percentage they are going to hold a fixed percentage with the RBI as a reserve to meet this uncertainty. So the remaining percentage is going to distribute for the commercial bank through the commercial bank. They are going to circulate the money based on the requirement. Based on the requirement, they are going to manage with this money. So they are the issue, bank of issue. So they print the currencies. So next, bank to the government. Customers or general public, we visit the bank or we will deposit, we use the bank, financial institution as a security purpose. So in order to deposit money, in order to lend the money, we use commercial banks and other various types of bank. So RBI, Central Bank of India, is the bank for government. So for the some activity, for some project, so the bank is going to lend money from the RBI, as well as bank is going to deposit excess money with the RBI. So central bank is a bank for the government. It acts as a bank for the government in order to accept the deposits and in order to lend the money for the government. So this is the second function. So next one, custodian of cash reserve. So cash reserve ratio. So all the commercial bank has to maintain a fixed percentage of cash reserve ratio with the RBI. So from the total money, from the total deposits, you need to maintain a fixed percentage of cash reserve ratio with the RBI in order to meet uncertainty, in order to meet the financial shortage in future. So RBI, central bank, is a custodian for this cash reserve. So next one, custodian of international currency. So they maintain some security, they maintain some foreign exchange currency in order to meet the import and export. So in order to pay for the foreign country, you need to pay in their currency. So for that, they maintain their reserve foreign currency. So the RBI or the central bank is a custodian for international currency. So next one, lender of last resort. So you all know, so lender of last resort means if the commercial bank fails to meet the money shortage, if the commercial bank is failed to meet its, failed to supply the money in the market, then the RBI or the Reserve Bank is going to meet, or the RBI is going to facilitate money, or RBI is going to supply money for the country. So that means RBI is going to lend money for the commercial banks. So general public will receive or they take loan from the commercial banks. If commercial bank fails to meet money supply in the market, RBI is going to lend money for the commercial banks. So that is lender of last resort. So lender of last resort. RBI is the last person who can lend money for the banks. So next one, clearing house for transfer and settlement. That means, so the bank, commercial banks. So under commercial banks, we have studied the functions of commercial bank. Under secondary function, we have discounting bills of exchange as well as collecting, receiving, pay and gathering the credits. So that means we are going to receive different instruments like promissory note, discounting bill of exchange as well as the check. So now bank has all these instruments, different types of instruments. So the customer has received the money whenever they need by submitting their or by giving their instruments, financial instruments. If commercial bank requires money, commercial banks needs money immediately, for that it acts as a clearing house. So RBI is going to collect all this instrument and they are going to pay money for the commercial banks. So in order to meet your requirements, you are going to, RBI is going to act as a clearing house for transfer and settlement of your financial instrument, different types of instruments. So next one, controller of credit. RBI is a central bank, is a controller of credit in the economy. If the RBI allows the commercial banks to lend money for the general public, it leads to the inflation. So for that, in order to control the inflation, they increase the CRR and SLR. So through this, increasing and decreasing the CRR and SLR, that is cash reserve ratio and statutory liquidity ratio, they control the money flow in India. They control the money flow in country. So based on the condition, they are going to increase and decrease the interest rate as well as the CRR and SLR. So they control the credit in economy. So in order to maintain the stability, they are going to control or they are going to fluctuate the CRR, SLR and interest rate in the economy. So last function, protecting depositors' interest. So RBI or central bank is going to guide, is going to regulate the commercial banking activity, commercial banks and its activity. So in order to protect the interest of, depositors. So you need to protect, you need to give protection for the depositors' money. So RBI protects the investors' money. So by regulating the commercial banks and its activity, they are going to protect the customer interest or depositors' interest. So these all are the functions of commercial bank. These all are the functions of central bank. So this is all about today's session. So let us meet in the next session with some more topic. So the last topic under unit 2 is banking system. So let us discuss the last topic in the next session. Until then, keep watching. Thank you.